Welcome to ForexTV.com. It's Friday, December 21st. I'm Remy Hookey for New York Forex Market Buzz. In New York afternoon trade, euro dollar is at 1.4356 as of 1:40 p.m. Eastern Time. Sterling dollar is trading around 1.9820, while dollar yen is around 114.05 yen. In today's U.S. data releases, personal income rose 0.4% in November, while personal spending gained 1.1%. That was the biggest rise since May of 2004. Meanwhile, October spending was revised to 0.4% from 0.2%. Meanwhile, the core PCE deflator rose 0.2%, but on a year-over-year basis, core inflation climbed 2.2%. And the final December reading of the UFMISH Consumer Sentiment Index fell to 75.5. Joining me this afternoon is Esiner, Senior Market Analyst at Ruesch International. Good afternoon, Omar.
Good afternoon.
Thanks for joining us today.
Thanks for having me.
Well, first and foremost, in today's session, the yen has weakened across the board, and we're continuing to see an improvement in money market conditions and also some holiday cheer on Wall Street today. But as we head into even thinner conditions in the next few sessions, what technical levels will you be watching for the yen against the majors?
Well, dollar yen just broke through 114, the figure, so I think that was a little bit of a psychological resistance. But above that, I think the next key resistance for that pair will probably be around 114.70 or so. Really, as you mentioned, the dollar yen has benefited from an improving of money market conditions. We've seen the Fed's open market operations this week and the operations of foreign central banks help to alleviate some of the concerns in the credit markets, at least temporarily, and that's helped out risk appetite, which definitely has been weighing on the yen. Another factor has been the talk of capital injections into Merrill Lynch. That also helped alleviate some concerns about the health of the financial sector, and that ultimately boosted stocks and, of course, weighed on the yen.
Okay, and another currency we should probably touch on today is the sterling. Following the latest BOE minutes, sterling has been under pressure, and today the British currency fell to a record low against the euro. Given UK fundamentals, what's your year-end forecast for sterling dollar as well as euro sterling?
Well, sterling's come off quite a bit from its 26-year high that we saw in early November, but I think it does have a little ways to go. We could probably see it below 198, the figure. Probably test 197.50 before the end of the year. Again, the large part of this move is really based on expectations for further policy easing from the Bank of England. Those expectations were somewhat confirmed earlier this week when we saw, as you mentioned, the dovish minutes from the Bank of England meeting in the beginning of December. So, on balance, I think continued pound weakness is likely in the cards, and that's going to continue to be fueled by rising expectations for a near-term rate cut from the Bank of England.
Okay, and let's move on to euro dollar. 2007 has seen a high of 1.4966 for the pair hit almost a month ago. Well, after seeing dollar strength in the previous sessions, the pair is trading right now around the 143.50 levels. So what levels of support and resistance do you see for the pair in the next coming sessions?
Well, the next test is going to be the psychological level of 143, the figure. That's if the dollar can resume its kind of year-end appreciation that we've seen over the last week or so. So I think 143 the figure, and then below that 142.5. To the upside, euro dollar should find a little bit of resistance as we get to about 144.5, and then above that 145.20.
Okay, and before we wrap it up, let's take a look at so-called commodity currencies. The U.S. dollar has weakened against the Aussie and Kiwi and come off recent highs against the Canadian dollar. So briefly, if you could highlight your take on the commodity currencies going forward.
Well, I think these currencies have benefited in large part from the improving risk appetite throughout financial markets. As we've mentioned, the yen has fallen sharply, and the other side of that trade tends to be the commodity currencies, namely the Aussie and the Kiwi. Their high yield has once again garnered some support for them as a result of improving risk appetite in the market. So I think as long as we see risk appetite remain relatively stable, as long as equities remain or maintain their upbeat tone into the end of the year, then I think we could see definitely some more upside for the Aussie and the Kiwi. The Canadian dollar has improved against its U.S. counterpart a little bit over the last couple of sessions, and that's been mostly the result of some profit-taking. It's fallen off pretty sharply from its high in early November. So I think that was due for a little bit of a correction. Going forward, though, I think if we see more or a growing notion that the Bank of Canada could follow up this month's rate cut with another one in the near future, then I think the Canadian dollar could be vulnerable to some losses.
Okay, Omar, as always, thank you very much for insight and analysis into the Forex marketplace.
Thank you.
And have a great holiday weekend.
Thanks, you too.
That wraps it up for Forex Market Buzz with Omar Esiner, Senior Market Analyst at Ruesch International. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.